What if I told you that waiting for mortgage rates to drop could actually cost you thousands, even if they fall below 6%? Because, according to the latest data, that's exactly what could happen. Hey, before we dive in, be sure to hit that like button, subscribe, and click the bell so you don't miss any of my weekly real estate tips. I break down the market so you can make smart, confident decisions in today's housing landscape. All right, as we move into the final stretch of 2025, we're getting new data from Fannie Mae, ICE, Mortgage Technology, and others that paints an interesting picture. Mortgage rates have eased slightly, and affordability is the best it's been in years. But despite that, many buyers are still waiting for the perfect rate or the perfect market. Here's why that mindset could cost more than it saves. Mortgage rates have dropped from a January peak of just over 7% to around 6.16% for a 30-year fixed loan. Yet, many buyers are still holding out for something under 6%. According to Fannie Mae, that might not happen until late 2026. And even then, we're only talking about a small dip to 5.9%. Meanwhile, home prices are climbing again. ICE reports that prices grew 1.2% in September after months of slowing. So, even if rates drop slightly, rising home values could erase any savings and possibly increase monthly payments. In other words, waiting might not save you money, it might cost you, and it might cost you thousands. And that's just one risk. When rates finally dip below 6%, experts predict a surge in buyer activity. The Mortgage Banker Association already saw this in September. As soon as rates eased, applications spiked. More buyers mean more competition. More competition means bidding wars and higher prices. In fact, in the last week alone, 2 of my buyers have been beaten out on homes in a bidding war. They are happening. If you wait for the crowd, you could end up buying in a seller's market, not one favorable to buyers like we have right now. Right now, buyers still have leverage. Sellers are offering concessions, rate buydowns, and closing cost help. Deals that might vanish once everyone jumps back in. The truth is, there's no such thing as a perfect rate or a perfect market. Historically, mortgage rates have averaged 7 to 8%. Today's mid-6% range is still below that, and with affordability improving, this might actually be the best window we've seen in over 2 years. So instead of chasing perfection, focus on personal readiness, stable income, manageable debt, and a long-term plan. If the numbers make sense now, that's your green light. Fannie Mae predicts rates will dip just below 6% by the end of 2026, less than 0.5% over more than a year. So, before you wait for perfect, remember, time in the market usually beats timing the market. If you're ready, don't wait for the crowd. Make your move now. If you want to chat about your particular scenario, please schedule time on my calendar and we can discuss it with zero obligation. The link's in the description. I'm John Hurlbut with the Altitude Homes team. Catch you at the next one.